Hi, my name is Chloe, and I am going to be talking about fossil fuel energy subsidies. So, energy subsidies are measures that keep prices for customers below market level or for suppliers above market levels, or they reduce costs for customers and suppliers. Numerous energy subsidies exist in the US tax code to promote or subsidize the production of cheap and abundant fossil energy. Each year, governments around the world pour around $500 billion into artificially lowering the price of fossil fuels, more than a triple what renewables receive. Even though the argument that it is cheaper to drill for coal, for example, than start a wind farm, in the end it will be a cheaper solution as we modify and scale up renewable energies. The federal government provides numerous subsidies, both direct and indirect, to the fossil fuel industry. Special provisions in the U.S. tax code designed to specifically support and reward domestic fossil fuel-related production are direct subsidies. The direct subsidies are intangible drilling cost deduction, which provides this provision allows companies to deduct a majority of the cost incurred from drilling new wells domestically. Percentage depletion is an accounting method that works like depreciation, allowing businesses to deduct a certain amount from their taxable income as a reflection of declining production from a reserve over time. Credit for Clean Coal Investment Internal Revenue Code creates a series of tax credits for energy investments, particularly for coal. And the indirect subsidies are last in, first out accounting, which allows oil and gas companies to sell the fuel most recently added to the reserves first, as opposed to selling older reserves first under the traditional first in, first out method, which allows the most expensive reserves to be sold first, reducing the value in their inventory for taxation purposes. Foreign tax credit is typically when firms operating in foreign countries pay royalties abroad. They can deduct these expenses from their taxable income. A master limited partnership structure combines the investment advantages of public traded corporations with the tax benefits of partnerships, while shareholders still pay personal income tax. The MLP itself is exempt from corporate income taxes. While we do have a few reforms in place, like Clean Energy for America Act, Financing Our Energy Future Act, and Off Fossil Fuels for a Better Future Act, it is clear that fossil fuel subsidies are undermining that effort to switch to any renewable energy source. Case studies clearly illustrates that subsidy and taxation reforms work better when they are part of a wider push for energy sector transformation. Reallocating savings from subsidy reforms to alternative sources of energy and energy efficiency helps to further advance a gradual phase out of fossil fuels by investing in the industries of tomorrow. There are currently 34 and counting countries that are starting to get away from fossil fuels, and we can see the success of them, like in Egypt, and we can look at many different ways to scale back on subsidies from other countries. There are also 14 countries that have increased their fossil fuel taxation, and 7 countries did both. This number is increasing every day. It is clear that this works, and if more countries start reforming, we can see a shift towards renewable energy. The International Monetary Fund, or IMF, has estimated that globally governments spend over $6 trillion on fossil fuel subsidies every year, and the United States spends over $20 billion each year compared to only $11 billion going to renewable energy subsidies. Looking at how Egypt is handling their reform, supported by the World Bank, Egypt approached its subsidy reform step by step, taking careful measures to protect poor people from negative impacts through helpful initiatives like cash transfer programs. There are many other ways to attack this problem, and we can clearly see that everyone can be affected for the better, and it is done correctly. We don't have to worry about negative economic issues. To the class of 2070, I would hope that we are using only renewable energies, or at least close to it. We don't know a lot of the long-term effects on us that climate change brings, and the sad fact is that no one in power really understands that we can't just flip a switch and reverse climate change. We need to stop further damage from happening. The economy plays a big part in making change happen, and if we can even the playing field for all energy, maybe we can start to be on track for more access to renewable energy. It is clear that fossil fuel subsidies are in place all over the globe, and we can read about the countries that are successfully transforming from fossil fuels to renewable energies. Egypt took 6 years to get to this point, so it's not going to be an overnight solution, but part of that reason is to make sure that it's done properly and during the right time while we take fiscal year into account. We already know that renewable energies are a better investment and they can create more jobs, which is an added bonus. But if we keep holding on to fossil fuels, we're going to have a much bigger problem to worry about.